Good morning, traders. It is Monday, January 22nd. Taking a look at the charts, equities are up again today. We're seeing the SP 500 up about 0.4. NASDAQ is up about 0.6%. So the markets are pushing higher. We can see here on the daily chart, we had this big pause on the SP 500. We talked about how pretty much, actually, let's just jump right over to our sentiment charts here. We had people really panicking in the SP 500, betting on the downside here. We had another bout here of deep red, people betting on lower pricing. And of course, after we see people betting on lower pricing, the market tends to go the opposite direction. And that is where we are. We're in this consolidation where the SP 500's had a big run. It just consolidated sideways here. And now we are breaking out to new all-time highs on the SPY. If we look at the big weekly chart, you can see we broke through here. Overall, very strong move to the upside. And I think this is, we're going to start seeing a lot of headline news here about the markets at all-time highs. And shorts are going to start covering, which is what I think we started to see Friday. And people are going to see if they want to get long. They're not going to want to miss out on this rally. If they're not in, they're probably going to get sucked in the next week or so. This is what we saw back in 2008. The market came up, pierced a high just for a little bit, and then reversed and sold off 54%. So definitely this market is in a phase here where people are about to start really piling in. Potentially, it could be short-lived, and then we see some big selling step in. If we take a look at the NASDAQ, it's had this very similar type of price action, people panicking, betting on lower pricing. As soon as price starts to roll over, they panic out, and then the market takes off without them. And then really, we're seeing the NASDAQ, the tech really lead the way. If we look at the semiconductors have been on fire. I think up over 7% in 2 days, in 2 sessions, are really muscling the markets up. It's a heavyweight, so we're definitely seeing that drag the markets higher with it. If we take a look, let's go back and take a look at the rest of the markets. We've got bonds. Bonds are up 0.75% overall. Bonds have had a nice rally. They're having a nice controlled pullback. They're kind of into a cluster here of moving averages. There is potential here for bond market to have another big potential rally. Maybe it'll even rally back up to these highs and put in what could be a major bottoming formation. So if we were to box this in, it could eventually work itself up. This is a bull flag pattern. Second half of this move should bring us somewhere up there. Let's just take a look at the Fibonacci. If we just grab the low, grab the high, grab the low. I need to zoom in to see where this low is. Grab the low here, grab this high. If we zoom out a little bit, you can see that should bring us somewhere up. The 618 brings us right up near the upper end of this range. The 100% brings us up through the middle of this noise. So more or less, this market could very easily push up into the 618 and then potentially consolidate, build a launch pad, and maybe want to go further. So again, later this year could be a very strong year for bonds. And it could put in this giant bottoming formation and then eventually start to go into rally mode or a bull market phase where it could go up because rates eventually start getting slashed because the economy is falling apart, recession hits, stocks are falling. So we'll see how all that unfolds. But there is a bullish looking, at this point, it looks fairly bullish with strong rally and pullback, but just to go look at things, if we were to look back at this last time we had something like this, a very strong move up, nice controlled pullback, the market just kept on, just rolled over and died. So again, just because it looks and feels like it's getting some traction doesn't mean it is going to happen. The only kind of differences on this one is we do have all the moving averages above the 150-day. They're clustering up, but we also saw that over here where it built a launch pad ready to go higher, and it ended up rolling over and dying. So that is why we don't want to try to pick bottoms, because the bottom can just keep on going lower and lower. Anyways, let's take a look over at the dollar. The dollar is relatively flat this morning. We've got trying to base out here. I do feel like we're going to see the dollar rally at some point this year when the stock market tops and starts to sell off. Short-term wise, the dollar has flipped to a bullish phase. Short-term wise, red bars were negative, then we got into orange bars, and now we're into green, telling us that, hey, we kind of busted through this pink line here. This is the 20-day moving average. It has formed a little bull flag. There's potential it might continue to want to push higher and work itself still in this sideways range until the stock market really breaks down. If we go and take a look, let's go take a look at our band positions. We have SSO, which we are still long, and it is up 19.5% from our entry price. If we take a look at the QLD, it is up 25.7% from our entry price. So those are our two open positions leveraged on the index, continuing to kind of pull and drag our account up while our other positions have all locked in gains, and we've reduced our exposure, and now we're just riding the stock market index up for as long as it wants to go. In a lot of cases, this is what happens. We see growth stocks that will top out first, shake things up, and then the indexes can keep grinding higher, and then eventually the index rolls over. So the way it kind of works is we are able to lock in gains on the more active sectors. They'll eventually get shaken out and closed out and that capital protected, and the indexes can keep dragging up and carry some weight to the upside as we go forward. Other than that, I think that is about it for this morning. We'll see how things unfold. Oh yeah, let's take a look over at gold and silver. Sorry. Taking a look at gold. Gold continues to pull back, kind of consolidating, clustering here around the 50-day moving average. The short-term trend here has turned red, not looking the most bullish for gold, although gold is still in an uptrend on the larger term chart here and above the key moving averages. Silver down 2% this morning. It's just not finding really any love. It got everybody sucked in, and then it flushed them out, had a bounce, and it just keeps making some multi-week lows here, falling out of favor. If we look at gold miners are struggling as well, falling out of favor and coming back down. Very choppy. I mean, the mining space, unless it's in a raging bull market, is just a noisy, very choppy, difficult, emotional ride. Definitely need to wait for the prime market conditions, which really don't happen that often. Really, in most assets, they don't happen that often. That's why we rotate from one asset to another, and we don't get caught up with one particular sector. As much as I love this one, I can't wait for the next major bull run in miners. It really is just dangerous and noisy until that happens. We can see the light at the end of the tunnel. I think we're getting closer to it, but it is definitely not here yet in terms of just looking at this price action. Other than that, I think that is about it. Crude oil continues to flounder and stuck under the 50-day and kind of trying to build a base or hold support through here. If eventually the $68 per barrel level is broken, I think we're going to be heading down towards those 40s. But at this point, it's still holding its ground, and maybe it's going to have a little short squeeze and pop to the upside before that happens. But as you can see here, it is all over the place. Bearish, neutral, bearish, neutral, bearish, neutral. Just flip and flopping, trying to figure out what it wants to do. Natural gas is just, it had a rocket ship move up, and it has had a rocket ship crash, phase back down, and definitely kind of all over the place, known as the Widowmaker. It tends to do this fairly often. Sharp rallies, sharp sell-offs all over the place. Definitely a difficult beast to manage. Anyways, that's it for now. We'll talk to you soon. Bye-bye.